These guys do a great job getting a great return on their money.
This is one of those companies where you would pay a premium for.
You need to have one in order to get a new one, essentially. Do we want to own this thing for a long time? Guys, I believe Ferrari has the ultimate moat. I've said this before. People have said, well, didn't you say Disney? I said Disney has a great moat, probably the second best. I think Ferrari has the ultimate moat. Mo, what do you think about my statement there? I'll defend it in 2 seconds, but what do you think of my statement?
I think it's a valid argument.
So my reason being...
I want to see the reason.
One, they have a limited number of cars. They sold 13,155 cars last year. That's it. The manufacturer sells it. I recently went in to Ferrari of Naples to see what they had, and they said to me, do you own a Ferrari? I said, no. They said, okay, well, if you want a new Ferrari, you need to buy a used one, and after a month, come in and we will order you a new one, but you need to have one in order to get a new one, essentially. He said, listen, if you want to order one now, we can do that for you, but you're going to be at the very end of the list. You're going to have no priority over anybody else. That's a huge, and when they create a supercar, they don't sit there and say, all right, who wants it? They sit there and say, do you want it? They go to people and say, do you want this car? Do you want this car? You've earned the right to have this car, right? Second, what's a discount on a Ferrari?
Zero.
Zero discount.
There is no discount.
There's zero discount on a Ferrari. And it's the ultimate status symbol. And the limited supply is the big thing to me.
Yeah.
The world's only getting richer and richer and richer. There's going to be more and more. I think the fastest growing market they had was Africa. Now, it wasn't a huge total number of units sold, but the point is Africa and China and India are still growing in their population and wealth.
So there's going to be increasing wealth, but they're probably not going to increase supply that much.
My guess is they increase supply at a lower pace.
Very little.
Which would be very smart for the brand.
Yeah.
You know, Monish bought Fiat years ago because he said Fiat owns 75 or 25% of Ferrari or whatever it was.
Yeah.
And he thought the Fiat stock was not pricing the Ferrari part in there, which was great.
And he bought a Ferrari with his winnings.
Is that what he did?
Yeah.
That's how he bought the Ferrari?
Yeah.
Oh, that's funny.
And he got a blue one, and they said, why blue? And he said, because it's not red.
All right, so Ferrari, ticker symbol RACE, R-A-C-E. Did it go over $300 a share? Did it go over there?
297.82 is the all-time high.
And that was just last week.
Yep, so almost.
Guys, this has been an up chart, up 432% since it went public in 2015. Let's look at some key figures here. First off, $53 billion market cap, enterprise value $57 billion. That difference is the net debt. And high moat businesses can probably afford to manage a debt load. They're fine, absolutely fine. PE of 49, 5-year PE of 60. Look at this, gross margin of 48% for a car manufacturer.
It's insane.
Think about it this way. Tesla's like 20% on the high side. A lot of car companies are 13 to 16%. They're 48%. Ferrari's bottom line profit after taxes and overhead is higher than most car companies' overall gross margin. That's an insane number.
Yeah, if you would show me this and not tell me what company it was, I wouldn't guess car company.
Correct, you wouldn't have known.
Yeah.
Look at this return on invested capital over the last 5 years, 15.7%.
Yeah.
These guys do a great job getting a great return on their money. And guess what? If they want to increase output by double, by building more factories, I bet you the ROIC would actually go higher. They probably make an even bigger number on their money. That's the incredible part. So this high moat, the question becomes, what's a reasonable amount to pay? Because as we see here,
I mean, that's a big, yep.
This PE is huge.
Now, this is one of those companies where you would pay a premium for.
100%.
Not this premium, but what's the premium?
Maybe this premium, I don't know. Because guess what, Mo? If we knew they were going to double production in the next 2 years, would we pay this?
Yep.
I absolutely would.
Yep.
Because
I know doubling production means doubling sales. That I don't have to guess.
Yeah.
It means doubling sales.
That's the thing.
Yeah.
So their profit's going to go from $1 billion to $2 billion. Would I pay a 26 multiple for Ferrari? Absolutely, I would.
Yeah.
That's the question. So whenever, guys, back in 1987, I believe this is what I was told. I think I read it somewhere, that Warren Buffett started buying Coke at a PE of 30. When he finished buying it, it was like much lower because profit had jumped up. So why did he buy Coke at a PE of 30? Why does value investor buy Coke at a PE 30? And by the way, since then, including dividends, he's received about 11% annualized return, which isn't insane, but it's pretty good. Pretty good for paying 30 times earnings for it. Why?
The brand and the moat.
Yeah. And the world potential. He sat there and
long
said,
runway.
Long runway. There's still a lot of potential for Coca-Cola in China still. This was 30 years ago. India, Africa.
Yeah, still.
Huge. And guys, they made my favorite thing in the world. They've now made Coke Zero. I'm going to lie to you and say this entire video was brought to you by Coke Zero, even though it wasn't, just because I want to attach my name to Coca-Cola so bad. I have like literally, now it's probably down to like 4 to 6 of these a day. Down to. But Ferrari, I cannot express this enough. Ferrari, I believe, is the ultimate moat because it has the cachet, it has everything about it, the exclusivity, man, and the premium price. This is not a premium price.
No.
This is not a premium price.
Anybody can buy it.
That's what I love about
Ferrari.
Ferrari.
Can buy this.
Now, I think I've read the average Ferrari sold last year was like 320 or 300,000 and had a 50% gross margin. That's pretty solid.
Wow.
That's incredible, guys. That's absolutely incredible. Wow. So, the question becomes, what's a reasonable price to pay? Well, let's go see what the 8 pillars look like. All right, it's got the dreaded. Oh, one thing I hate about Ferrari, actually, I will tell you. You ready? Let's get right to the stock analyzer tool. I don't like this. The profit and free cash flow is very different.
Did we figure that out yet?
We have Dalton on it.
Okay.
So we have our analysts trying to figure out why is the profit and free cash. If it was any other company but Ferrari, I'd be very nervous. But I'm like, okay, let me give Ferrari some little leeway and figure that out. I don't like it when the free cash flow is lower than earnings and net income. And the reason being, the net income can be manipulated in so many ways, from SEC accounting rules, even a company altering their net income. But free cash flow is a lot harder to manipulate. And which one sits there in your bank account? The free cash flow. So a lot of value investors will say, listen, all I care about is free cash flow. All I care about is free cash flow. So a lot of people, look at this PE. 60 versus a price of free cash flow 104. That's the difference. That's what sucks. And guys, remember, if you have our software, you can put in up to 12 pillars.
Yep.
So many different variations. There's literally quadrillions of variations you can do in here. So check that out. Analyst estimates.
Yeah.
Mo, what you got?
They're going from $6.80 end of this year to $8.61. Very, very little growth.
Yeah, not very much at all.
No, but I think that even let's say that they do 5% growth I don't think that 5% growth is going to stop, because they have the ability to increase production and say, oh, we need growth this year, increase production, then scale back production if they want to. They have that ability too.
Now the question becomes,
Actually,
what is their goal? I don't think they're saying...
That's even more motish for me now that I just said that out loud. They can literally raise and lower production as they see fit, because they are going to sell out of every car if they increase production.
Yeah, but the question becomes, do they want to have... So I'm a big watch guy. Rolex, I love Rolex. I really do. And they make over 1 million watches a year. Patek Philippe, great watch brand. They make only 60,000 units a year. Rolex still has an amazing brand name with amazing exclusivity, even though they sell over 1 million units a year. Patek, they just want to keep the supply very, very limited. But they want to keep focus on very high-end watches. Ferrari is like Patek, and Rolex is like Mercedes. Still a very high-end one. You can get several $100,000 into a Rolex, just like a Mercedes. You can get, but you can also have somebody who just saves well for a year, not even a year, to go buy a Rolex. Yeah. For Ferrari, I mean, you're only driving a new Ferrari if you're a somebody.
Yeah, or you hit it big in crypto.
Which means you're getting your Ferrari repoed right now.
Amen.
Okay.
All right.
So let's look at the stock analyzer tool. Now, guys, like all of our videos, we go through the software pretty uniformly, but I want everybody to remember, these are all the tools that come with our software, and we're running a special right now, $7, 7 days. Actually, we're always running the special. Try it out, $1 a day. Even if you decide you love it and you want to say it's a little over $1 a day, but it's a great promotion. And the big thing is, coming soon is Real Estate Calculator. Sometime this year it's coming. The second it comes, it will not be available to just everybody in this group. So if you sign up now, you get the Real Estate Calculator. As long as you keep your account active. After this comes out, it'll be its own separate program that is sold separately. And then don't forget, you get the Everything Money community, because I'm sure a lot of people would love to have a conversation because of our community members, like-minded. They love to discuss the difference between profit margin and free cash flow margin. That literally, along with valuation, is my biggest issue with Ferrari. Now, we're going to use a stock analyzer tool now to go determine what price we want to pay for Ferrari. I cannot stress this enough in Ferrari. It's going to be a wide range, because I'm going to put very big differences in PE and price of free cash flow. Why? Because this is such a big moat, I don't know what an appropriate price of free cash flow is. This is what makes investing hard. And I read something recently, whatever the guy's name who runs investments, Warren Buffett, he goes, listen, we spend 95% of our time talking about the qualitative aspects to a business now. We don't talk about quantitative. Now, some people would sit there and say they just want to focus. No, my guess is Once they find a company that matches their quantitative criteria that fits the price, then they focus purely on qualitative. Do we want to own this thing for a long time? And then they buy it and sell it a year later, which you started to realize.
Yeah.
But this is a qualitative play. This is a quantitative play with a very, very heavy qualitative aspect. Yeah. You have to decide for yourself what's an appropriate growth return for Ferrari for you. What's an appropriate multiple for you?
Yep.
All right, so we're going to do that real quick. Mo's going to do a 10-year analysis. I will do 20. All right, guys, so Mo did a 10-year analysis. I did 20-year. Remember, we're going to go line by line, our low, middle, and high ranges that we created to sit there and determine what we want. So, Mo, what'd you do for revenue growth for a 10-year analysis?
I just peeked at your PE, and I was about to change my. We'll get to that. 4, 7, and 10.
Okay, I did 5, 9, and 13 because I think that if they increase prices 5 to 6% a year, plus production 5 to 6% a year, that gets your 13. And that's very possible in them.
Yeah.
If they increase production and increase price at the same time, it compounds on itself. Profit margin.
I did 15, 18, and 21.
So I went higher. I did 7 because of what you said. They can control their profit margin.
It. And that was the hardest part about the stock analyzer for me.
Yeah.
They can control it.
17, 18 and a half, and 20. Now free cash flow.
Okay, I did 10, 12, and 14, and this was a tough one.
I think I'm going to focus on earnings here when I do but I did 10 and a half, 11 and a half, and 12 and a half. Okay. Now, what'd you do for PE?
So I did 18, 20, and 22, and I almost did 20, 22, and 24.
So I did 23 across the board, but Mo, when I was going to do it, I was going to do 18, 23, and 28.
Oh, wow.
Because I thought to myself, okay, actually, you know what? I'm going to do that.
Okay.
I'm going to do that because I want to sit there and look at it. Now, what'd you do for your returns?
I did 9, 11, and 13.
So I did 10, 12, and 14.
Okay.
I would agree with you on the 9, but I still think, I don't know. 9 probably is appropriate.
I mean, I looked at 4% revenue with profit margin of 15%, which is less than they've done in the past decade. And I was like,
Yeah, I think you're right.
Yeah.
I did a higher profit margin than you did.
Yeah.
Hit the analyze button. The stock's currently at 293. My low price is 66 to 107. High price of 166 to 266. Somewhere in the middle. It's on my watch list at 150 to take a further look. Because I think it's somewhere in that price range. The point is, guys, it's so far. Look at this. It's so far away from even that. It's 10% away from that.
Yeah.
Mo, what'd you get?
I have 60 to 90 on the low end, 113 to 170 on the high end, 85 to 125 in the middle.
Okay, Mo's got his watch list at 120. I think I'm more optimistic about Ferrari than Mo is. But that's the point. This is the art of investing. We don't know the right price. All I know is I'm not willing to pay this price.
Right.
And that alone is enough for me to go, okay, I feel comfortable. It'll become really uncomfortable when it's at 150, 160, 170. That's when it'll be uncomfortable.
I think it'll start to get uncomfortable around 200.
You think so?
Yeah, I think that's when you'll be like...
I don't know. We'll see. But either way, guys, $7, 7 days, everythingmoney.com. Check it out. Get the software. Get the numbers to back up your decisions. Thanks, guys.